ENJ Capital. Today's video will be about how to make money when the markets are going down. If you've been watching the news, if you've been watching the markets, if you have any positions in the market, you've probably been affected this past week. We're not pointing any fingers. In China, somebody been cooking a little bit too much bird. I'm all into culture. I love everybody's culture. I love learning. I love traveling. I've been to Japan. I wanted to go to China. Not anymore. Maybe. This virus is going around. It's called the coronavirus. What is coronavirus? Coronaviruses are a family of viruses known for containing strains that cause potentially deadly diseases in mammals and birds. In humans, they're typically spread via airborne droplets of fluid produced by infected individuals. It's so easy to get other people sick in China. It's so densely populated. There's always somebody wearing a mask. Now the problem with this coronavirus is it starts out small. People think it's just like a common cold, so they don't really take it serious. They don't really know they have something serious, and then it spreads. You know, people going out of China all the time. People are getting sick. People are dying. The markets don't care that people are dying. The markets care about the money. Now, because this coronavirus, factories are being shut down in China. People are taking the week off, the month off. Good for them. Stay home. What happens when productivity stops? The money stops. Money's not coming in. Money's not going out. It's going to affect sales, revenue, earnings, guidance, all that. And the market knows that. That's why the markets are going down right now. Nothing else is different about the markets. Our economy's still good. Unemployment's still low. Trump's still there, kicking it. Nothing's really changed with the Federal Reserve or anything. It's just this little hiccup. Been a while since the market had some sort of correction or pullback. When stocks go down, they tend to go down sharper than they would go up. You may be affected. If you're long term, if you're a trader, you're loving it. A 10% move in SPY, we're talking about flipping $50 to $5,000. It moves like that with options. If you're long, any ETF that mirrors the market, and if the market is going up, your shares are going up. But since the market is going down, your shares are going down too. If that's all you did, you didn't have any downside protection, you're feeling it right now. You did have a stop loss. First of all, stop losses don't work after hours. And if a move is so sharp downward, the stop loss may not even get hit. Since China's such an economic powerhouse, the markets are feeling it. Anybody who remembers the Trump-China trade war, I get PTSD thinking about it. That was a rough time for me. One day, trade talks are going well. Market goes up 1%. Next day, China's like, nah, they're not. Down 2%. Trump's like, nah, I'm serious. Going good. Up 2%. Next day, China devalues currency. Down 3%. Like, come on. You can't hold anything overnight. What you can do, you can short a stock, pretty much any stock that follows how the market moves. We talk about beta. A stock with a beta of 1 moves in line with the market. A stock has a beta of 2. That means it moves twice as much as SPY would move. So if SPY goes down 10%, that stock probably went down 20%. You could short any stock affected by China. Anybody who does business with China, and that's a lot of companies. So you can buy puts, put options, and you can sell calls. We talked about what these were. Watch our videos. Let's say you're against the whole shorting, right? You don't want to be a shorter, or you just feel like shorting is dirty to the economy. So you can just buy inverse stocks that do the opposite of what SPY does. So they would have betas of -1 or around beta of -0.98 or something like that. Pretty much the opposite of how SPY moves. If SPY is going down, then the inverse would go up. Stuff like SH is short SPY, UVXY is ETFs. You have VIX futures. VIX is the fear gauge. If the markets are going down, VIX is going up. There's a lot of inverse buying you can do. Let's say you don't want to short individual stocks. Good idea. If it was up to me, I'm not a financial advisor. I have many years in the stock market. I love the stock market. I'm passionate about it. It's the only thing I really study. I love the markets. Since I'm not a financial advisor, I'm not telling you what to do. If you're going to short anything, short futures. Short the ES, the S&P futures. Futures market is open pretty much 24/5. It's open pretty much all night, all morning, during market hours, and it only closes for about 15-30 minutes. It closes early on Friday, closes Saturday, and it opens up Sunday night. They're more liquid, meaning you won't have much problem getting in and out. Tax benefits, no PDT rule. If you have less than 25,000 in your account, you can still day trade. You can get in, get out in seconds. Let's say you're new to futures, you need initial margin. That's the minimum amount you need to put in to get the trade. It's a little expensive. The initial margin varies in price, so you can pick the futures you want to trade. Let's say we're doing ES futures. You short it. You can get out at 7 p.m. at night if you wanted to. You can get out at 12 in the morning if you wanted to. That's the beauty with it. If you're obsessed like I am, and I have a futures position on, I can't sleep. Most importantly, tick size and tick value. With stocks, a stock can go up a penny. That's the smallest increment and goes up. You know, it might be $10 and 1 penny, $10 and 2 pennies, $10 and 3 pennies. Stocks move up in penny increments. With futures, they have tick values. It's the minimum that it moves up. For ES futures, it's 0.25. ES futures right now is at 3,000. It might go 3,000, and then up one increment would be 3,000, 0.25, 3,000, 0.50. It goes up by 0.25. That's the minimum. Now, each minimum, it goes up. You make or lose $12.50. Every 0.25 move, $12.50. So if it goes up $1, you made $50. 0.25 times 4 would equal 1. 12.5 times 4 is equals to 50. But like I said, if you're against shorting altogether, you think that they're filthy, degenerates. They're not, but some of them are. You can buy gold. Now gold is a tick value of 0.10. That's the minimum it's going to move up, is 0.10. And that's $10. So for every dollar move, that gold futures goes up, GC, that's $100. Now these vary. These tick size and tick values vary. So if you're trading something, you want to know exactly the tick size and the tick value, because you can be in something with a tick size of 1 penny and you make or lose $50 per penny move. I think that might be VIX. I forgot what VIX was at, but VIX is pretty expensive. VIX could wipe you out real quick. If you don't have a little bit more money to trade ES, you could trade micro E-mini futures, but it's a lot cheaper. You won't. It's not $50 for every dollar move. Save yourself shorting, short futures, buy gold, buy inverse, buy VIX. You can buy puts. You could sell calls. E&J Cap.